Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm reviewing Tesla's Q4 and full year 2020 earnings report. This won't be super in-depth analysis, just a general overview of some of the key highlights from the earnings report. There will be a highlights from the earnings call video coming as well today, guys. But in this video, we're just focusing on some of the key takeaways from the earnings report. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. Here we are, Tesla's financial results for Q4 2020 and the full year. Just looking at the highlights here in terms of cash, operating cash flow, $2.8 billion in 2020, phenomenal. $4.9 billion increase in cash and cash equivalents, taking their total war chest to almost $20 billion. And free cash flow of $1.9 billion in Q4 alone. Profitability, $721 million GAAP net income, $2.5 billion non-GAAP net income. Now, this one disappointed Wall Street and some investors as well, $270 million GAAP net income. Why would that be? This was much lower than everyone was expecting, primarily because of Elon's stock-based compensation. As Tesla's market cap has continued to explode, the stock's gone to the moon. This means that Elon is now closer to unlocking some of those compensation tranches they need to be accounted for, and that accounts for this shortfall in GAAP net income. 5.4% operating margin, not brilliant in Q4, but again, we're going to see this continue to expand over time. As Tesla scales, it's a little bit lumpy, still early days. The business, you're going to see a little bit of fluctuation in operating margin, but long term, the trend in operating margin is towards 10% or more. And huge news, an updated Model S and X are launching very soon. And just an update on Berlin and Austin, Tesla say they remain on track to start vehicle production this year with structural batteries, that is the 4680 cells. We can see the thing that really hurt Tesla here is their margins, automotive gross margin, total GAAP margin, and operating margin, again, primarily from stock-based compensation. But this is a small blip in the radar and not really a point worth focusing on unless you're a Wall Street analyst or a short-term trader, in which case, go for your life, have a panic, whatever. I'll see you next quarter, next year, and next decade. The big highlight from the financial summary here, total revenue grew 46% year over year in Q4. Name another business doing the same numbers in terms of total revenue as Tesla that's growing revenues at even close to this rate. I don't think you can find one. This page is an absolute gold mine. Installed annual capacity. This is really important. Tesla's current annual capacity. Let's do some math here. What's 100 plus 500? That's 600 plus another 450. That's 1,050,000 vehicles total current production capacity. Now, there is a key distinction between production capacity, how many vehicles you theoretically could produce if there was no downtime whatsoever, and actual production, which accounts for downtime, upgrades, repairs, maintenance, etc. So Tesla isn't literally going to produce 1,050,000 vehicles because there's downtime, repairs, maintenance, upgrades, etc. But the point is, this doesn't include any capacity whatsoever from Berlin or from Austin. And something very interesting here. First of all, we can see that Tesla's future products include the Cybertruck, Semi, Roadster, and future product. I'm assuming this is the Model 2, which I think is probably going to bifurcate or trifurcate. There's probably going to be a European hatchback design, a Chinese city car as well, designed in the China Design Studio. There may even be some other variants of that as well. And maybe even this future product is an umbrella term, which eventually will include Tesla's van and others. But what I find very interesting is we see here, TBD, to be determined. The facility that these vehicles will be produced at is TBD. I thought this was going to be Austin. Is Tesla hinting that another factory is going to be announced soon, or that they haven't quite decided where they will actually produce these vehicles? I have a funny feeling it's the former. I think we may hear a new announcement for a new Tesla factory sometime this year, but don't count on it. And I love this graphic here. Global market share of Tesla vehicles by region. Notice this is global market share of vehicles, not electric vehicles, vehicles. And we can see this is the chart to follow in the future. We can see Tesla basically a speck, a fraction of a percent. Now suddenly look, Tesla's gaining market share. In US and Canada, Tesla now has over 1% of the vehicle market. It's getting close to 1% in Europe and the same trend in China. Now, I know it's early days, this doesn't look amazing, but we're going to see these numbers get to double-digit percentage market share over the next 5+ years. Mark my words. And some incredible information on the Plaid Model S. I mean, what even is this thing? Model S Plaid is the fastest accelerating production car ever made, with a 0 to 60 mile time of less than 2 seconds and a quarter mile in under 9.3 seconds. Absolutely ridiculous. We can also see here the EPA estimated range gap continues to widen. Tesla in red, nearest competitor in blue. We can see over time in January 19, reasonable gap. January 2020, larger gap. January 2021, even larger gap. Now, just let's think about this for a moment. Tesla's already the leader, and their lead is growing. We can see in the graphs here, we can literally see this is evidence of Tesla's lead growing. They're not slowing down. The competitors aren't chasing them down. They aren't catching up. They're getting further and further behind. And just look at this. I mean, the fastest production vehicle ever produced. Some of these vehicles on this list are hundreds of thousands, $1 million+ vehicles. And the Model S Plaid, a 4-door, 5-seat family sedan, crushes them all. And look at this. What a sight to behold. Tesla energy storage deployments in gigawatt hours. Just look at the trend here again. I think people tend to focus a little bit too much on the short term. The thing to focus on is the trend. As we can see, Tesla continues to grow their solar deployments exponentially. And I quote, "For the first time, our total battery deployment surpassed 3 gigawatt hours in a single year, which is an 83% increase compared to the prior year." And again, how many companies do you see boasting of 83% growth on any of their product lines? Exactly. In short, Tesla's energy business, while small relative to their automotive business, is growing at a phenomenal rate and shows no signs of slowing down. Probably my favorite page from the entire report, Tesla's outlook. So I'll just read from the top here. Given the number of significant projects in the pipeline, aka there's an enormous amount of uncertainty, we have simplified our approach to guidance for 2021, enabling our teams to remain focused on achieving our long-term goals. I love this. It's also a big FU to the Wall Street analysts who are so short-sighted they care about next month, next quarter, next year, rather than the long-term trend. Volume. We are planning to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries, which is insane. But again, this is how Tesla gets to 20 million vehicles per year in 2030. In some years, we may grow faster, which we expect to be the case in 2021. Now, I really just want to take a step back here. This is how Tesla should be approaching guidance, in my opinion. The long-term trend, Elon has thought about this. Okay, we can grow around 50% per year. Obviously, it's going to be lumpy. If Tesla builds another 8 to 10 factories this decade, we can't be certain what year those factories are completed, when production ramps up, any hurdles and obstacles and challenges they need to overcome. So there's no point guiding. Here's why. If one of Tesla's factories just this year alone ramps up a little bit quicker or a little bit slower, this could make a difference of 100, 200,000 vehicles produced in the year, just from a single factory coming online or being a little bit late, etc. So there's no point for Tesla to guide, we expect to deliver 950,000 units this year. But then there's a 2-month delay in one factory, suddenly all that quarterly growth goes into the next year and they miss by an absolute mile. This is probably going to piss off a lot of Wall Street analysts, but I think it's fantastic. These numbnuts are so focused on incremental, oh, what happened this quarter, last week? F that. What's the trend? What's happening long term? That's literally what matters, and I'm really glad that Tesla's now focusing on this. Of course, many of the numbnut investors out there, including Wall Street analysts, will be so unsure of what to do. How do we know if Tesla missed their delivery guidance if they didn't tell us the exact number of vehicles they plan to deliver this exact quarter in this exact year? What do we do? I don't know. I need some numbers. Please help me. Somebody please. I need better than 50% per year on average over a multi-year period. I think this is going to cause a lot of stock investors and some of the Wall Street analysts to have a cry in the corner and ask for their daddy to hold them because they're scared because they don't know what to do. Tesla isn't going to guide, we're going to deliver X amount of vehicles this quarter or this year. So what do the Wall Street numbnuts do? How do they decide if Tesla missed guidance? If Tesla only guided that over a multi-year period, they're going to grow at around 50% per year on average, but there'll be fluctuations and variations within each year. In terms of cash, Tesla has sufficient liquidity to fund their product roadmap, long-term capacity expansion, and other expenses. In other words, they've got more money than they need. Good problem to have. In terms of profitability, we expect our operating margin will continue to grow over time, continuing to reach industry-leading levels, not just decent, industry-leading levels, with capacity expansion and localization plans underway. And now for some eye candy, the Model S front interior from the refresh. Beautiful. I think it's going to take some people a little time to adjust to the wheel, but just think about this logically. Autopilot, you barely touch the wheel anyway. Move a little bit of the wheel, you can see the secondary screen here. Bob's your uncle. Notice this. Witcher 3 demonstrated on... Now, Witcher 3, that's a pretty high-spec game. Hang on a minute, what's going on here? More on that in just a moment. And now the rear of the Model S refresh. Look at this. Beautiful screen for infotainment and gaming. And yes, remote controllers are coming. Gaming inside your Tesla is going to a whole new level. And yes, the new computer inside the Tesla dedicated to gaming is approximately as powerful as a PlayStation 5. I'm not kidding. Guess what? Tesla knows autonomy is just about to be solved. They're laying the groundwork. When you don't need to pay attention to the road, what can you do? Well, gaming's going to be one of the many activities you can do inside a Tesla. Wireless controllers, multiple screens. Tesla knows it's around the corner. This is one of the most positive, bullish signs for full self-driving you will see. Here's the exterior refresh, a few tweaks, not an enormous change, but a little, and some epic photos inside the Gigafactory in Shanghai with the Model Y die casting. Also got the Model Y stamping. I just love watching this stuff, nerding out on the engineering stuff. The Model Y body shop and Model Y General Assembly in Shanghai. Feels like it was only a year ago we were seeing the Model 3 General Assembly photos from Shanghai. Very fast progress. And some progress pics again. We've got the Model 3 factory in the foreground there in Shanghai, Model Y in the back. This factory is also continuing to expand into neighboring properties as well. I'm not sure if Tesla has options on all the neighboring sort of farmland, but certainly does on some. So over time, the Shanghai factory, ultimately, Tesla's told us they're aiming to produce over 1 million vehicles per year. Current capacity, let's call it a little over 250,000. Once the Model Y stuff's ramped fully, they'll get closer to 500,000. Then we've still got to see another doubling in annual capacity from there. The Berlin factory is going up at record speed as well, which is amazing to see, but at this point in time, nothing Tesla does really surprises me anymore. We'll see vehicles rolling off production lines here in the second half of 2021. And if you have any doubts about that, have a look at the interior of the factory. We're not far off now, just a little bit of equipment to install and Bob's your uncle. And this is one of my favorite slides from the entire presentation. A picture is worth 1,000 words, so I won't say a whole lot, but damn dude, what the actual fuck. And finally, one of the best ways to get perspective on Tesla's progress over time. Key metrics in trailing 12-month format. Vehicle deliveries, look at that trend. Straight to the fucking moon. Operating cash flow, and more importantly, free cash flow. Again, look at this trend. Negative free cash flow, suddenly it runs positive and now trending up. And net income again, running negative, and now positive. I mean, this really sums things up visually. For those who doubted Tesla, their ability to produce profits, to produce cash flow, etc., this was the trend, and spoiler alert, this is the trend. These will continue to grow over time. Vehicle deliveries, operating cash flow, and free cash flow, and net income all will continue to trail up over time. So there we have it. Another phenomenal quarter and full year from Tesla. Their first full year of profitability, records everywhere. Record profitability, record revenue, sales, production, deliveries, cash on hand, record. Of course, according to Wall Street, Tesla missed a little this quarter, but guess what? Berlin's still under construction. Austin's still under construction. The Plaid Model S has just been released. The Plaid Model X has just been released. The Cybertruck's just around the corner. The Model Y's just around the corner in Berlin. Deliveries will begin taking place from both the Berlin factory and the Austin factory this year. I'd say that's rather bullish. As I record today, Tesla stock down 5.34% in pre-market trading. So here's a question, guys. Let me know in the comments below. Are any of you buying the Tesla stock dip today? And by the way, just a reminder, I will be providing some highlights from the earnings call a little bit later today, so stay tuned for that. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.